Rob, as you've been hearing, hawkish Federal Reserve commentary, and at the same time, the COVID situation in China and lockdowns there certainly keeping investors on edge. But in your view, Rob, how material is this IMF downgrade to growth for the investment and market outlook? Is it material or not?
I think it's very much a reflection of what we're seeing and what we're thinking here at Fiera Capital, which is the market debate is transitioning rapidly from a growth concern, from an inflation concern to a growth concern. It doesn't mean that we've done all that we need to do at the central bank levels and we will see rate hikes as you rightly outlined, but we do think it is really about growth concerns and further downgrades like the IMF across the world and particularly in China. The growth downgrades we saw to expectations in China have just become rippling through the markets, and we expect those to continue as we expect to see concerns and the reality of economic weakness coming from the lockdowns, logistics, and supply chain concerns that are real in the Chinese economy today.
Of course, all of those supply chain issues really filtering through to the inflation conversation as well. But Rob, talk me through how you're viewing surging treasury yields right now. And interesting, Will also pointed out the 10-year real yield turning positive for the first time since 2020. Do you think surging yields are going to spell trouble for equities globally moving forward?
Yes, we do think that there's going to be caution in the equity markets because of the rate environment and because of the growth environment increasingly. We can't forget the war. So the word and the mood in the markets is risk off. And whether that's decline in markets, I think we do believe in staying invested in equities and like the equity markets as a long-term asset class, but it is clearly a risk off environment, not just because inflation, because we do think perhaps there's room to believe the central banks are tackling this. They haven't done it yet, but they are tackling it and facing it aggressively. But the growth concern will take a further impact on what we expect in terms of market moves around the equity markets particularly.
Rob, it's Hadley out in Abu Dhabi. I mean, when you hear voices like the Atlanta Fed president, they're essentially saying that he's worried about further rate hikes and what that could do. I mean, if you look at the IMF's World Uncertainty Index, essentially what they've said is that these are levels not comparable to anything since the 9/11 attacks. So do you think we're going to hear more of those dissenting voices and maybe even a growing chorus like the Atlantic Fed president going forward? Because the war in Ukraine shows no sign, sadly, of slowing down. And at the same point, energy prices, as you see, WTI crude sitting above 103, Brent crude above 108.
We have to recognize that these are markets and environments around the globe, from the war to COVID, which is having real impacts in China and economic impacts, to the inflation concerns that no one really knows how these will play out. So indeed, I do think you're going to continue to see dissenting voices, whether it's Larry Summers, who's been much publicized recently. And I think investors are feeling that appropriately so and looking at safe haven assets. Safe havens continue to be the topic of conversation because it is very hard to play out how these economies and how these various economic impacts will ripple through to the markets.